Good morning. It is Monday morning, August 8th. The market just opened and looks pretty interesting. Since last night when the futures opened at 6 p.m., the market has been on a tear, going straight up. And then it looked like it was doing one of those curls, the curl. And it looked like a definitive breakout. As a matter of fact, I had mentioned that to everybody in the service. I said, "Hey, looks like a breakout," and so I posted it. And as soon as I posted it, it did this. It went straight down. But now, here you can see it right here. This is where I posted it. This green bar, right there. And then as soon as I posted it, it did that. Almost like it's waiting for me to post. But now the market's open and it looks like it's trying to recover. Now, this is a very, very important level here. And I'll show you why on the volume profile. But before we do that, let's take a look at what we have ahead of us this week as far as economic reports go. Today, there's nothing. Nothing is going on. Well, we have a 3-month bill auction and a 6-month bill auction. And the investor movement index, I am not familiar with that. Jeez, I'll have to take a look at that. On Tuesday, nothing of note, really. Productivity and cost is important because it's going to tell us more about the worker and employment situation. A little more detail that we'll have that might supplement what we learned on Friday, that jobs are off the hook. I still have a hard time reconciling that report with all the other negative reports. So it's very difficult for you to see these conflicting reports and try to make sense of them. And you need to know which ones are actual data and which ones are estimates and which ones will be eventually revised. Most of the government reports are always revised, giving you the impression that they come out with early data or data that they want you to see. And then, that is the headline. And then later on, a week later, they revise it to something different. It happens all the time. So look, man, when you say things like that, you sound like a conspiratorialist, right? But I don't want to sound that way. That's just the truth. It happens all the time. Okay, on Wednesday, of course, we have the CPI. Everybody's going to be looking at the CPI on Wednesday morning. Wednesday morning is the big day for this week. And then, of course, Thursday, we'll follow up with the PPI. Those two will give us a good handle on where inflation is going. Are we at peak inflation or are we retreating? There's the big question. Of course, the EIA Petroleum Status Report is also important to us because that gives us a handle on what's happening with the energy reserves. And typically what you're looking for is if there is a buildup of reserves, that's generally bearish on the economy, meaning that if there's a buildup of reserves, that means that the economy used less energy. Except when you had a buildup of reserves last week because the government had released 4 million barrels of oil from their strategic reserves. So that gave a false look. So if they didn't do that, there would have I think it would have been negative, but I'm not sure of the exact number, but I think it would have been slightly negative. So that is another kind of one of those reports that is hard to read these days because of, I guess, these people out there, humans, trying to take all the squiggly lines and make them straight, to quote the great Alan Watts. All right, and then on Thursday we have jobless claims. Again, big report because that will supplement and give us more detail on last week's employment situation report. And then on Friday, we have consumer sentiment. Now, on Econo Day, they're not really giving that a heavy weight. And also with import and export prices, that also has not been given a heavy weight because that is also a very good indicator of inflation. As a matter of fact, import export prices, in my view, is a much better indicator of inflation than the actual CPI or PPI, because that tells you without any kind of filter or adjustment or new calculation the exact pricing or the increase or decrease of pricing of goods going out and coming in. And what better way of judging where inflation is, particularly in what they call the core inflation, than the cost of goods going out and in, and what our deficit or surplus is. So, but apparently that is not as important to other people, but it seems to be the unfiltered way of looking at that situation. And quite frankly, our trade deficit is continuing to grow at record pace. And so that should be looked at. I mean, that doesn't deserve a green. It deserves a red. Red meaning it's more impactful to the market. All right. Anyways, there's our outlook for the week. Overall, I would say we need to wait until the middle of the week before we start seeing real volatility in this market. Now, of course, anything can happen between now and then. I don't see any Fed. Well, there is one Fed governor on Wednesday coming out, Charles Evans. But other than that, nothing. And that's going to be interesting. It depends on where the market goes, whether or not you start seeing Fed governors coming out and trying to reinforce their narrative. Of course, they don't come out with their next interest rate decision until September. So a lot can happen between now and then. But other than that, there you go. All right, let's go to the charts. Wow. Since I was gabbing away, the market tried to go for a new high and then just got beat down. Isn't that interesting? So let's take a look at the bigger picture here. We'll take in a little bit more data. Oop, wrong button. We'll just bring in a little bit more time. So you can see since August, we've been basically consolidating and going sideways, trying to break out as we did here last week and then again this morning. And it looks like we're going to give it another go. And let's bring in some more. You can see the entire rally since mid-July, since July 14th. So this has been our bear market rally on a tear. And we've been developing a couple of different nodes here in the past 3 weeks. We have this node due to this area of consolidation between mid-July or to late July, several days, about a week, and then another breakout. Anytime you see a breakout, you see a lack of volume, right? Or what we call a volume well. And so that's significant. So price tends to move. The way you look at that is you say, hey, price tends to move very fast through a volume well. And when we revisit volume wells, it does the same thing. It's not like it comes back and then fills it all in randomly. For whatever reason, the market looks at these levels as significant. And even on the retrace, it looks at them as significant. And that's usually because, or typically, I guess the assumption can be made. It's more than an assumption that because you can actually see the orders, there were orders lined up at the edges of these nodes to either protect or defend or whatever you want to call it. And that makes sense too, because big institutions and investment houses have laid down their bets according to these striations in the market. And these nodes tend to get revisited over and over again, like the one that we're in currently. So if we were to go and take a little bit more data here and go back a little ways, you'll notice that there was a period way back when, before we made the big plunge, of 9 days of consolidation. And that's in the current node that we're in. And we've been sort of revisiting that again. So it's the same thing. And the same thing with these areas of very thin, impulsive moves. Those are important because those are the areas where you find these volume wells. Now, inside of a volume well, there's always like a gateway, a point where the market has to make a decision. Does it go through the gate or does it get rejected? Is the gate closed? Is the gate open or is the gate closed? And we call those the LVN, the low value node, or it's kind of like the antithesis of the POC, or the point of control on a volume node. The point of control being the highest point of volume, like this one right here, 4118 on this current node, right? But that doesn't seem to have as much power as the low points do. The low points seem to have way more influence on movement and behavior of the market. So, for instance, we don't often see price come right up to the POC and then stall there or get rejected or move through it very quickly. And that's because, in general, price is moving back and forth, consolidating throughout the entire node. It just so happens that that's where the highest amount of volume is. However, on the low point, that's a different story. Again, it acts like a gate. So the price tends to go up to those low points, pause, and then gets rejected. Like you can see here, this little red mark right here, red bar, either gets rejected or allowed to go through to the next node. So we like to look at those. And if you were to look at an order map or, something like Bookmap or other types of tools, you can see the orders, they tend to pile up on either side of these low points. For whatever reason, those low points are taboo in the market. Why? Why that specific price? Why 40.43 is like hell to somebody, or 40.44, whatever it is. Maybe it's the number. Maybe it's the actual number, 40.44. I don't know if I can go right to it. I can't seem to get the resolution to get right to it. But there's probably something about 40.44 that really pisses somebody off. I don't know. But that is significant. So what we do is we tend to mark those up because we want to know those. Because we know that when price comes there and encounters one of these LVNs, that it's going to behave in one of two ways. It's either going to act as an open gate or a closed gate. If it's a closed gate, price gets rejected. If it's open, it will move right through very quickly to the next node. So that's a very important feature of volume profile and, that behavioral aspect to it, because it allows you to create scenarios, potential scenarios of how price may act as it approaches these various market structures. So we know that when we exit enter, if we exit a volume node, we enter a period of lower liquidity in these volume wells. And we know that there's a good chance that it's going to scoot as fast as possible until it encounters one of these LVNs, one of these very low volume levels. Maybe we should call them LVLs. And it's going to make a decision there. Either it gets rejected and comes back to the previous node, or it's going to go through. So that's important. Once it gets into a node, it gets trapped. It's like not a black hole, but I mean, I don't know. The way I used to, or the analogy that I've given is that it's sort of like when you're in the desert. If you've ever been in the desert, and I relate this because a few years back, a couple of years, 2.5, 3 years back, I went to Southern California, the San Diego area. And then we took a trip out to the desert to Anza Borrego because it's supposed to be very beautiful. And we wanted to do some trail walks in the middle of the desert in the middle of the summer while it was 115 degrees because we're crazy. So anyways, when you're riding to Anza Borrego, you first have to go through mountains. And the mountains are a lot like the value nodes, the volume nodes, right? You really can't move through them quickly because you're going through these mountain roads. It's very hilly. There's lots of trees and twists and winds, and you tend to move much more slowly. Then you finally break, and you come out into the desert. and everything opens up. And then there's a period where you're climbing down through the mountain, getting to the desert plain. And when you get into the desert plain, it's kind of surreal because you can look for miles and miles and miles until you see the next mountain way off into the distance, maybe 30 miles out. And you know that, okay, our target is to go somewhere in the middle because we were headed to Anza to the ranger station so we could get our maps and find all these interesting places to visit and go out there and see if we could see the longhorn sheep and stuff like that, road runners, and you name it. All kinds of interesting things out there. But on the way out there, it's just flat plains, and as far as the eye can see, just 30 miles of straight flat road. And it's hot. It is hot. It goes from like 85 degrees in the mountains to 115 degrees on the plains. So you better be prepared to make it to your destination. And our destination was actually halfway between, right to the LVN. But if you were to go to the other side, you better make sure that you're prepared, that you have a full tank of gas, you have plenty of water, because you don't want to break down and not have any water. I mean, it's 115 degrees and you're 15, 20 miles from nowhere, right? And I don't remember there being really great cell service out there. So anyways, this is a lot like the desert. You're going through the desert like a bat out of hell. You want to get through that as quickly as possible to the next oasis or to the next node. The oasis being that sort of gateway in this scenario. So that's what the volume wells are like. They're like going through the desert, and you get halfway between, and you have to decide, do I go to the other side? Do I have what it takes to get to the other side? If I do, I better go lickety-split. Or do I return and come back? In some rare instances, you might find the oasis like Anza and just decide to hang out there for a little while and walk in the mountains. But anyways, that's my analogy of volume profile nodes and volume wells to the desert. And that's the behavioral aspect of it too. So we're currently in this node, and while I'm talking, it looks like price is still trying to break out. Let's zoom in there and just take a quick look. Yeah, made another go at it. It really does want to break out. It wants to go. And that's significant because now we're entering into another volume well. We're exiting this big node. Now it's hard to see the big node here because it looks like it's way down here, but the top of it's like right up here, this breakout point, right about there. And we can see that very clearly when we go to the 2-hour chart. See right there? There it is, right on the edge. So when we mark up the profile, we mark up everything with respect to these volume structures, because they will tell us, they will give us clues about where support and resistance are. A lot of people think that support and resistance are, you just choose the bottoms here, or you just do a trend line there, and it shows you. That is such bull crackers. I don't know if there's such a thing as bull crackers. Maybe there is. But it's not the support and resistance lines that are providing support. It is the edges of these nodes. Because, quite frankly, the institutions can't see the lines. All they can see is where the volume is and where they're placing their orders. And those orders are all lined up along the edges of these nodes, and also on the LVNs or the LVLs. So that's how we mark things up. What we do is we want to capture that node, usually with a rectangle, something like this, and find the steepest part of that node, because that's where the vast majority of those orders are located. And then just draw a rectangle like this, and it will be there for future reference for the rest of the week. Like that. I guess you could do the same thing down here. I'm not sure if we're going to be getting down there, but it's still worth marking up. Something like that. Now in this bigger view with lots of information, and this isn't even all the information. I could bring in more. I could go to, say, 3 hours, maybe get a better view here. Just want to make sure I get everything in context. These vertical dotted lines are session breaks. So I guess, you could say that there's one right above this too, a very minor, what we call a child node, right there. Yeah, right there. Not quite as impactful. And then we need to mark up the LVLs or LVNs with a horizontal ray. And I like to make those green just so they stand out. So the one that I see, that is first and foremost is right about there, where that's the low point. There's even low points even further in that are even lower, but I would say that right there is the first one. Actually, this one here is one that we will encounter right there. I don't like the size or the color. I like green. I don't know why I like green for the LVLs, but I do. That's what I use. Let's draw another one. Should be one right about here. Right there. And then I would put one right on the edge here. Because I think that, and you can see how that has been adhered to. And I think that's really all we need. Maybe one on the other side here. Maybe another child node up here. Right there. All right. So that should be almost sufficient. And then I'm going to put one right in here, right where that low point is. Right. Can't seem to get it. There we go. Right there. Or maybe it should be like right on the edge, right there. Usually these edges are more significant. When you have a really low point and it's very long and wide, it's hard to tell. I might have to bring in more data, but I'm going to say it's probably on one of these little, here, like that, or this one here. We'll just put it there for now. All right, so now that's going to give us a guide as price traverses these areas or comes, back down. Of course, we have this node here too that is somewhat significant. So let's map that as well. Yeah, that one's a little harder to see, but maybe make it a slightly different color so it stands out. All right. So now that we've marked up everything and we have our volume nodes, the next thing to do is just to give them names. And the reason we give them names is so that when we're talking about our analysis from day to day, we can refer to those names. And so we usually prefix it with a T and then a numerical suffix. So the first one will be 0, like ground zero. All right, so that's T0. So when I'm in the group, I'm talking about T0. Everyone's listening, and they say, oh, yeah, we know T0. And I say the top of T0, and they know exactly where I'm talking about. They already know the level because they've been looking at it all week. And so if I were to then refer to T1, it would probably be this guy here. And I'm going to make that a little bit smaller to reflect its size. Now, I want to bring these, closer to price so that we can see them when prices, when we zoom in, because we're not going to be evaluating things from way out here. The reason why we go to this bigger time frame is so that we can see the structures, mark them up, and then zoom in. Because we're day traders. So let's go down to 30 minutes and see how this all looks. All right. Looks good. All right. And we might want to pull down and see other days up here. And see there's the T. This should be a T1. So this is T1. This is T0. And now I can, these are my scenarios. I'm thinking that if we move up here, we're probably going to move up right into T1. If we move down, we're probably going to hang out inside T0 and maybe consolidate a little bit. Maybe something like this. So what I'm doing is I'm creating scenarios here. And I think that if we get into T1, there's a good chance we'll go right up to its edge. There's also a good chance that we maybe continue on to this LVN or LVL. And it's either going to go through or get rejected, right? So there are my scenarios. Now, it's possible that we find an intermediary LVL inside here, but I think that once we've exited this volume well is pretty impactful. And this is just a minor node here, this T1 node. A lot of times what happens in T1 nodes is that there are a couple of different scenarios here. Like this is a very popular happening, and that's when we come into a child node after leaving a parent node like T0, testing the top of it and then coming right back to the parent node. So that's a pattern I see a lot with a parent-child node relationship, with T0 being the parent and T1 being the child. So we'll refer to these with the prefix S and then some number. So, and I'll number them based on which one I think is most likely to happen. So S1, S2, and I guess you could say, I'm not so sure that we're going to break out and just keep on going, quite frankly. We'll call this S3. And this could be like the continuation of S1 and then the continuation of S3. It doesn't, to me, I think that we could be moving up into T1. That's what it looks like. It's possible that we get rejected here. Every once in a while, you do get rejected at the bottom of a node. Doesn't happen all the time. It's also possible that there's an LVN somewhere in here, like right at this high point at 4187, and then that is another LVN. It's hard to tell from here in this view. We'd have to really zoom out to get a good look at that. You even have to get another little zoom out a little bit more. Yeah, you see right in here, right on this edge, right on that edge right there. Right there. I would say that that is also another area. Any of these sharp edges, they all are impactful, potentially impactful. I like to even them all up, just like that. All right. So now we've completed our market structural analysis from volume profile, and we're ready to go for the day. And now we have all our lines in place. If we do have new structures that get created intraday, we'll look at those intraday, but we might mark them up and allow them to lag throughout the week. But then next Monday, we'll be doing another clean slate analysis and removing all this stuff and making sure that we're good to go for the coming week. And that's because this is an evolving mapping. All right. I don't know if there are any questions from anybody in the chat. We have a couple of people that are saying hello. How you doing, Mohammed and Taylor? Great. All right. So yes, it does look like this LVN is a good placement. I think that this is going to be a decision point for the market. For whatever reason, there was a sharp drop-off right there. And we know when we see a sharp drop-off, we know that there are orders lined up there to do whatever those orders are there to do. We don't know what the individual players are planning, but they are lining up there for whatever reason, and it's either going to allow us to move through to T2, or to get rejected and go back to T0. That is the analysis. All right. There you go. Let's go back to the big head. We do this every Monday, and that sets us up for the analysis for the week, and then we go from there. We are doing asymmetric trades, trading the very final day of expiration, Monday through Friday, of options on the S&P, using either the E-mini or the SPX options. And we're taking advantage of that extraordinary premium decay, and we're also evaluating volume flow through the options chain, as well as the market structure, looking at volume profile. And then from that, we execute day trades with our own special analysis that you would learn here, and also improving on a day-by-day basis by reflecting on everything that we do, breaking everything down into small time boxes, and employing a kind of continuous improvement process a la agile methodologies. So that's what we do. If you'd like to give it a shot, give it a try. Why wouldn't you want to give it a try? There's the question. There is so much to learn in this service. 4-week trial, go to 0-dte.com/try. Thank you very much for showing up, and we'll see you later on today, actually. Take care.